Welcome to Trading Lounge and the gold report for Monday the October 18th, and starting with the two-day chart here. So we're looking at the triangle pattern, which is our most favored pattern at this particular point in time. I do have a bearish pattern, and we'll also look at that as well, because the 18 got sold off here quite a lot, and it hasn't thrown the count out, but we just need to be a little bit mindful of the situation at this point in time, and we need to work out at what point we can be also bearish with this as well. I looked at the yields, which is the nemesis of gold, to a point, and it has popped up here a good 4% on the Friday, and still opened a little bit higher here. But they kind of, both of them, are working higher. The yields aren't pushing it down just yet. And I can also see here too that that the yields need to push higher as well, because I can see this is a daily chart for the 10 years, of course. So I can see here 1 and 2 and 3 and 4 and 5. So we've got that impulse wave here. So it's possible that we've got a top in play, but this is also an impulse wave just in here. It's possible we could look at an A wave here and some sort of B wave and C wave over here to have a top in place. But I don't think that's the case, because I think this is also building here. I'm not sure if it's 1, 2, 3, 4, 5 here, but this little move in here is not 5 waves. It's in 3 waves. So it's probably 1 and 2 and 1 and 2 and 3 and 4 back here. We may get a move down here, but certainly this is still pushing to the upside. And in terms of a classic trading levels pattern at the medium level here, 150, so the arrival, the reaction, the first high above the level, an A and a B and a C wave here, and then to the upside. Whichever way I look at the yields, they're to the upside at this point, which will put pressure on gold. But sometimes things can move together, just kind of shaking each other around on all the up and down moves. So yeah, nothing really sort of there, but triangle, wave C, an A and a B and a C wave here for wave D. Our 5-wave structure here is not looking crash hot, I must say, but I do want to give it a chance to recover itself here. It has dropped back to we've got this trend line here to here to here, so it's come back and sat on that. It's also sitting in with group 2 here as well. This is just a bearish count that we're talking about this morning. We can talk about that a little bit later on. Also to here as well, let's just take it from this low here roughly to the current high. The 61.8% is here, the 78.6 is here. So it's come down pretty hard, so it's likely to rally. We'll just need to keep an eye on the rally and see what form that takes. Putting wave 1 here and wave 2 here is a little bit of a long shot, because I've looked at this little top here. If we go in and it's possible that we can have an A and a B and a C wave down through to here. If I just go, I won't go to 100 ticks. I need to go to 10 ticks to look at that top area there, which I have done. So we'll have a bit of a look at that. So if I just take this top bit here, we can see that, because if it was going to be an impulse wave to the downside, we can look at it as 1, 2, 3, 4, 5 here, like that's the first impulse wave down. So then we should have a wave 2. So wave 2 can come back to here, I guess, in one way or another. But then it doesn't present the next wave down as an impulse wave. I can see we get 5 waves out of this move through here. Then it comes corrective, so maybe I could go an A and a B and a C wave here. Well, can't really do the C wave, only got 3 waves here. Maybe I could use that, and then the spike here touching the top. Don't know. This is probably belonging to this 5-wave structure, which also overlaps here as well. this move up here is corrective, so that's okay. And that's the high there, which then I've got 5 waves here, which makes this corrective. So I'm kind of thinking to myself, well, it doesn't really start off being a nice impulse wave to the downside. Even if I can squeeze 5 waves out of here, this high here takes that out. But yet I'm still, this high here is there and still under these highs. And this is looking correct. It was hard to get 5 waves out of that. So it kind of looks a bit like a triangle really, as an A wave here and then a B wave way over here for it, because we've got overlapping wave structures and groups of 3 here. So there's a good case for looking at this here as an A wave and a B wave here, and then counting down at that point, which would give us 1 and 2. I know you can count this in different ways as well, but I just wanted to try to make it sort of fit within reason. So that fitting in with reason is 1 and 2 here, and 3 here, and 4 here, and that 4th wave here going down to the 5th wave over here, because I can count 1, 2, 3, 4, 5 here for 2, 1 and 2, 1, 2, 3, 4, 5 for 3rd, 4th and 5th, and ABC for the 4th. Here the 38.2% retracement looks pretty good here. It's around here, and then we can count this down as 1, 2, 3, 4, 5 here. So is that the low? Is that like asking too much? And is, you know, will we push up from this particular low here? We're in group 2, so group 2 is 65, 72, in this case 772, and then the 80 up here. So we don't really want to drop out of this low. We don't want to come any further from this. We want this to build to the upside. I can start to see that, you know, I mean, I can see here we got 1, 2, 3, 4, 5 here and ABC here. So we can push higher, but it could be a rally. It could be just a corrective rally. It could even be an A and a B and a C wave here, you know. It could be an A and a B and a C further up as well. So we may have to go up to the top here in all of this as well. So there's a long way to go before we get all of this. GDX and GDL and silver, they all really maintained their presence. So I wonder if, you know, if it was the banks with their futures contracts, you know, selling off at this price at the 18 here. So we'll just see how, all I can do here is see the recovery play out here. On the bearish side though, if we take, come back to the bigger picture here, because we have been looking at a bearish count. I've got to get in the whole picture. So in this case, an A wave here, an A and a B and a C wave for the B wave, and then we've got 5 waves down here for 1, 2, 3, 4, 5 here, coming down for, well, wave 5 here for wave C in that case. And yeah, look, I know there's a few things wrong with this particular count, but being a bit philosophical, we could get 1, 2, 3, 4 and 5 out of this, and then an A, B, C here. We've been talking about this before, and then moving down from that point. So we have moved down, and in a nutshell, this move up through here makes quite a nice ABC pattern here, really. So this little move going up here, that was in 5 waves, right? So that's that low here at these roughly the 1745. If that was breached, then that would force that to be a corrective pattern. It would be an A wave here and a B wave over here probably, and a C wave here. It would force it to be corrective at that point. So that particular low coming in through here, we need to keep an eye on that, and then we also need to keep an eye on any impulse wave coming down. So as I've mentioned, the move down here I've counted as an ABC pattern here, which is a bit of a long shot, I have to admit, but what we'll do if we see any other further downside coming into play here, we'll look at, well, first of all, let's just go to the was it the 1 hour chart for this? I don't know if it was, yeah, maybe it was, but what we need to do now is we need to put, as we've moved on a little bit, we need to put wave 2 up there. We'll need to put this as wave 1, and we'll change this to the A wave here, and the B wave, and a C wave, of course. Just bear with me here for a second. So we would need to look at it like this here. So this can come over here. Put this over here. We'll use those later. We'll need this is wave 1 here. So that's basically 5 waves down for wave 1. This becomes the A wave here. All of this becomes some kind of ABC pattern in here for the B wave. Could probably extend it to one of these as well with that, but it's here nor there at the moment. We've talked about this of being a triangle pattern and other sorts of patterns. This is our 61.8, so there's not a big difference there for that, you know. For being a wave 2, that would be, you know, that would be okay at that point, you know. And then we'd probably have to look at this being wave 1 down here for this, and wave 2 coming back. It will probably be a bit shallow. So what we need is we need to see yeah, I need to do some work on this, but this is a little bit rough up here. But if we can see that we get 5 waves down here somewhere, if we see it threatening lower, then we'll be looking for the A, the B and the C wave coming back up here. And then we'll look, I mean, we talked about going long, short below this one here. That's below the 1750. We might need to, we could probably do that a little bit higher up here as well. So we're on the short side, we've got a session or two before we need to sort of concern ourselves with it. But we need to start sort of considering it more so now. So I'll need to get a better understanding of this move down through here as a bearish pattern. Probably need to lift that up 1 degree of structure as well. But anyway, I'll figure that all out. Yeah, so the short trade, if we can get half a position on that B wave there, so I'll just put a thinner line for that, and then we'll look to build in a little bit further. Once we can confirm that we've got 5 waves here, then we can look for that wave 2. So yeah, there's a fair bit of work to do here for all of this. Of course, that will need to be 1 degree higher as well, but I'm just putting it here for the time being, just to see if that's a wave 4 and fades down into wave 5 here, but they'll be needed to lift it up into green at that point. So yeah, let's just, we just got to gather more information. Yeah, like I said, silver's held up well, and GDX has held up well, and GDL, all the ETFs are looking okay. If we have a quick look at silver for a moment. So silver's like still in its structure to the upside, so I don't really see a problem there. I mean, of course, we could look at this as an impulse wave to the downside, but we'll just see how that plays out. Yeah, obviously if this makes a new high here, we need to go with that as well. Need to add to the position at that point. That's the idea of being on group 1 here. We haven't had a really good classic trading levels pattern here, but this move back down, retesting the price and then taking that top out there, that's the retest, and that's the confirmation that that's been tested, and then we'll be heading up to 2.5 at that point. So GDX and GDL are a bit the same as well. They've come off a little bit, but nothing to be concerned about like spot gold. So yeah, it's probably the banks doing their thing again at that point. So let's just I think I can do there. So just to recap this a little bit, is that these would need to be changed to blue as well if it's going to be bearish. I mean, it's quite a nice 5-wave structure down here really, as 1 and 2 and 3 and 4 and 5. I know it's a little bit sort of, it looks like, I don't know if you've seen a a spider on LSD, when they try to make a web, it looks a little bit like this. It's a bit sharp and jaggedy and so on and so on. But, you know, if you take that spike off there and then you'd work this as 1 and 2 and 3 and 4 and 1, 2, 3, 4, 5, it kind of works quite nicely, really, you know. So I'm not, you know, we can't just throw this in the bin. We could do if we get an impulse wave up here, but we just didn't get it, did we? You know, I mean, it's not from a lack of trying. You know, we tried to sort of encourage it to go up, but, you know, a bit of wishful thinking. But it's just not there just yet for this. So let's just see how this recovers. And if it takes that 1750 out, then obviously there's a problem at that point. So 1750 as a retested resistance would send the market lower at that point, and then we would also need to confirm that we've got an impulse wave down to that point as well. And if we can do that, if we can confirm that's an impulse wave, then we can look at shorting the B wave here, so a little bit higher than this one, move in on this one, and then move in on this one. But the good thing about this in a way too is that if we think about this for a moment, this whole wave 1 here, right, and then if we've got wave 2 here, well then this wave 3 down here is going to be longer than this, you know. So that's roughly it there. So we could add another 60% to that. So that would bring us back down to closer to 1650 at this point for wave 3, if that was going to be the case. Now, you'd have to say too that if that is wave 1 and that is wave 2 there, and we are going into wave 3 down at 1650, it means that overall we're going to be down at 1600 again. And that it means that this blue wave 1 here and blue wave 2, then we'll have green wave 1 and green wave 2 here. So then this one here will be the third of the third of the third. So this will be really quite fast here, you know, if that's the case. So we will need to be prepared to act quickly at these points. But this would be a really nice trend down here to short, you know. We can see that, you know, Bitcoin is going to suck a lot of money out of the gold market. You know, I don't want to upset gold bugs or anything, because I mean gold's fantastic, but with the new ETFs coming in for Bitcoin now, 2 of them being approved. Yes, they're just paper ETFs, meaning futures contracts, but this week Grayscale will move over to apply for or change their product to an ETF, and then if the other ETFs get approved, which they probably will, from the SEC, Gary and all those people, then yeah, I mean, a lot of money is just going to go into Bitcoin, you know, through those ETFs, and that could really push gold down. So we need to be mindful of what's, you know, happening left field, so to speak. It's yeah, it is what it is. Alrighty, cheers.